Hi, this is Randy Finney with Right Side of the Chart, and this is a early session update for Friday, December 19th, 2025. It's 10:33 a.m. Eastern Time, so we're an hour into the trading day. And what I'll do in this one, as I mentioned yesterday, I want to do a video on gold, silver, GDX, and which are the mining stocks, of course. Time permitting, I might try to, if I get through this quick enough, I might squeeze in the ag input stocks. They're starting to look ripe for the next move up. Definitely starting, some of them are setting up there. But let's start out here. We'll see how this goes. If I can't get to those in this video, I will follow up next week on those guys. All right, so this is gold GLD, the gold ETF. We're looking at a monthly chart here, and gold is pretty much is going parabolic because if you have an uptrend line like you do here, and that uptrend, you have a series of trend lines that start to steepen, and that's what you have here. Basically, it's a parabolic line. You can see the slope continues to increase up. From my experience, as I often say this quite a bit, parabolic uptrends I've never seen one end well. They usually do not end very well. They usually end with a very sharp move out. So again, gold, the ETF has only been around since, you can see here, we go back to 2004. It looks like the trading history, at least on this chart. In the last bull market right here up into the 2011 highs was just a linear, well-defined uptrend line. There was your big breakdown candle. You can see that big red candle right there, breakdown, back tested for a couple months, and then that was it. You can also see here, I keep this 20 period exponential moving average on my chart because it does a phenomenal job, as I often cover, defining the primary trend in the stock market, the major indexes, the S&P 500, NASDAQ. And you can see, I've noticed, it does a pretty good job in gold. In other words, bullish, you're in a primary bull market when you're above it. And even after that first sell signal, remember, sell signals can come in many shapes and forms. You can have candlestick reversal patterns, topping patterns. You can have trendline breaks, breaks of horizontal support, and breaks of key moving averages. And you had them all here. First, the trendline break, the back test. You set up this little topping pattern right here with support there. Once that gave way, you can see you took out the 20-month exponential moving average with that candle there, and that was it. And that was a bear market that lasted for many years. These are, again, we're on a monthly chart, so this is a span of about 5 years right there, a plus bear market, which ended here. Then you had a breakout, and you can see, break out of the downtrend line, and also a break above that 20-month exponential moving average. Gold did trade based for a few years. And as I often say, moving averages are great during trending market. And, different moving averages with different securities. By the way, guys, it's not always a one size fits all. I might be able to retrofit this. What I mean by that, sometimes I'll go and I'll click and I'll modify it and change the period length, or go from an exponential to a simple moving average, see whichever fits better. When I say fits, I go back in time and I see which one really does the best job of defining. Either way, let's just keep this simple. This one's done a pretty damn good job. And you can see here, we had this trading period, and what I was about to say a second ago is, as I often say, get away from using moving averages and other similar trend indicators during periods of sideways consolidation, because you'll get a lot of whipsaws. That's the nature of that. Again, they do great defining up and down trends. And so that was it. So we did have a breakout there, and the bear market was over. So it's not as if it didn't work. You just had a couple dips back down below tests of the 20-month. And then clearly we started walking away from it here with this big green candle. And if you were a member of the site back then, I had 130. It says 131 here on my monthly, but 130, I was harping on that level for months. Kind of like, I'll harp on levels, key levels on certain stocks and other in the indexes. And that was the level I was waiting to see the breakout to start a new bull market, or to start a new uptrend, and it did. So after the basing pattern there, a lot like the markets do, will do in reverse, a topping pattern like that, a trading range, and then break to the downside. So that was it, and that started the bull market. Then we had another multi-year period of consolidation from really 2020 all the way through 2024, and then the breakout here. And you can see, a couple violations of the 20-month, which again is normal, especially with the multi-year trading range. And so that brings us here. So this is your big picture, guys. So this 20-month is not in at any risk anytime soon of being violated. But when it does, you might want to set a price alert or just watch it, put it on your charts and see. Now, here's the parabolic uptrend line right there. You can see. So, no sell signals. Gold's in a solid uptrend right now, but we're going to drop down in time frames. This is what my weekly chart looks like. You do have some potential. I call it potential because it's not confirmed. You need to see the PPO make a bearish cross down, negative divergence right there. So unconfirmed divergence. There's an uptrend line right here, which is at this point in time, again, you do have a parabolic advance starting to go parabolic in gold. Don't underestimate how far those things can go. If you are new to trading, maybe younger than I am, hadn't been around for enough time, just look at the NASDAQ 100 in 1998 through 1999 into 2000 highs. You'll know what a parabolic uptrend looks like. And so if you ever try to short a security going parabolic because it's overbought and you think it can't go up anymore, the market will teach you a very costly and painful lesson. So again, overbought, as I often say, just like negative divergence, it's not a sell signal. It's a condition that often will be followed by a reversal of trend, a correction, if you will. And that correction could either be just a correction, an ongoing bull market. And again, as I just showed you, until we take out the that 20-month, it's hard to say that the bull market in gold is over, right? You just don't have enough evidence there, or won't. That's one thing I'll be looking at. So that's it. That's what it looks like on the weekly. There's your uptrend line right there, and we'll step it down to the daily right here. So this is the uptrend line I'm watching right now. It comes off the late August lows, and it's very well defined recently. So you do have roughly equal highs in gold. Remember, we shorted gold here on that trend line break. We gamed it down. So here's your first decent support. I could add a level if I wanted to right about here, but let's just, I'll put one in there just for kicks and giggles. I do see some support around here. That's resistance. We consolidate around it. So you can call that, if you want, the BOD or benefit of the doubt level, about 388.50, right? So I believe I already have an alert, but as I do in these videos, just to be safe, can never have too many, set an alert. And big negative divergence, guys. So again, not a sell signal, a condition. Back here, when we shorted gold, we didn't even have negative divergence. We just had an overbought and a potential buying climax, which still may prove. That's when we went parabolic right here. We're going up. We had a nice clean uptrend line, and then we started going nearly vertical right there on high volume. And I said that may be a potential buying climax. So take those words for what they are. Buying climax marks the end of a trend, or at least a significant correction coming up, if that is what that was. And so far, we haven't taken that out. We're testing that. So there's your level. Set an alert. This is where we honed in last time. We shorted there. I believe that trend line break. We hit my first target, bounced as expected on the initial tag. Then we hit my second target. Went a little way through there. The gold was very volatile once this trend line broke and the sell signal triggered. We went down, we hit my third price target, and we reversed a hair shy of my fourth target. But we did have positive divergences wise. So you got to watch that during a trend. I had a fifth and final target zone that was never hit. However, if you want to consider this, now I don't, it's been so long, been in and out, but you can consider the same trade. We're still very, very, very much within any reasonable stop loss. If you shorted right here, took that initial sell signal, you're basically back where we were. So that's the story on gold. And I'll get to silver and GDX in a second. They always have and always will follow their big brother. Gold's the big brother. Silver will follow. GDX will follow. They just tend to move up in a multiple thereof gold. In other words, they go up more in a bull run, bull trend, and they fall more during corrections and bear trends. All right, so that's it, guys. There's your trend line right now. No sell signals, but a trend line to watch. And again, on the daily, I have it pretty darn close. So you might want to replicate that trend line. That is the story of gold. I'm going to get to silver and GDX, but I always say any analysis on gold, in my opinion, is incomplete without taking into account the outlook for the dollar. So this is UUP, the US dollar ETN. If you're new to the site, I'll just highlight this. This is a multi-year, at least on UUP. It is not as clear on depending which dollar chart you're looking at. You can compare, I'll analyze the dollar against the euro, USD, EUR, USD, which is the biggest component. Also the yen, the second largest component, or the straight dollar index. This is an ETN, does a decent job of tracking, especially in the near term. But either way, we put in that positive divergence at the base of the range there recently. Got bullish on the dollar, hit my first target, pulled back, hit my first target again, took out T1. Again, this was T1. There was a bullish falling wedge, a breakout, the bounce, a reversal off support. And we, as I mentioned, we put a little divergent high right here. We've corrected, but right now the dollar is still holding. We're at 28.04. We're still holding. You know, we had a brief dip below, come back to test the 200s. And so if this happens, as I've been saying for a while, the market will gradually, especially if we get close to T2, get the memo that the dollar's rising. And again, if you're new to the site, I talk about this often. That is a net headwind for gold. What does a net headwind mean? It doesn't necessarily mean gold must go down when the dollar goes up, but it usually does. And it's a simple reasoning is the gold that we're trading, GLD, gold mining stocks, GDX, gold futures, gold bullion if you buy it. You get a coin from Costco, whatever, that's priced in US dollars. So when the dollar goes up, it takes fewer dollars to buy an ounce of gold. When the dollar goes down, it takes more dollars to buy an ounce of gold. So when the dollar drops, the price of gold goes up. And when the dollar goes up, the price of gold goes down, right? Okay, hopefully I said that correctly. I think you got it. So we'll watch that. And it's still my preferred scenario. I haven't changed that. There's a zero line, which does a pretty good job of defining trends. Bullish when you're above it, you're in dollars rallying or any security. When it crosses down negative, you're in a downtrend, as was there. You had a nice downtrend from this point right here, and I'm just going to box it above so you can see. So it captures the good trends. And when you break above or when you're below it, not only is that a good trend indicator when the PPO line, and I'll use the signal line because that's the last of the two to cross that helps avoid whipsaws. So not only does it help define the trend, so we triggered a buy signal here on that trend indicator. We've been in a bullish trend on the dollar, but it also acts as support when tested from above, which it's doing right now, and resistance when tested from below once we change trends. So there we dropped below it, tried to back test it, got rejected, recovered it here, successful test from above, successful test from above, just like right now. So this is still my preferred scenario. If we're down here, we make a solid cross, we're clearly below there, dollar starts falling down here, well, things are going to change. My outlook may change, but right now it hasn't. That's why I haven't done many updates in gold. It hasn't been much to update. We're in that trend. We're gone sideways for months now. So watch the dollar, something to look for going forward as we head into year end and into next year. And maybe we have a little minor downtrend line that might pop in, bring some buyers in there. Okay, now let's get to silver. This is by the skin of its teeth, we still have the divergence here. We're making much higher highs. Silver's clearly in an uptrend, zero sell signals. And again, as I've been saying, silver's only going to go down so much without gold. So there's a beautiful trend line to set an alert in which to trigger a sell signal, right? Negative divergence. And on that 60-minute chart right here, I'm going to tweak this trend line. You can see here's your pattern. So if you're and guys, we did this back here. Many didn't want to short silver. I give you a bearish rising wedge there, and we had a sell signal, and it dropped. If you blinked, in other words, if you waited too long, silver was down 14% from the sell signal, not from the high. That's 15 from the high. Clean. It's almost an identical pattern, just a smaller one. You see the uptrend line right here, very well defined. There is your divergence line, i.e. negative divergence, bearish rising wedge pattern. So, and from the point it broke down, I'm just going to measure in time now. I already told you it was a 14% drop. That took 10 days. 10, and that's 10 calendar days. That's not 10 trading sessions. That's less than 10 trading sessions. That includes weekends. So in about a week, you lost 14%, or we made 14% because we shorted it. And that ended with, you got it, my favorite, positive divergence right there, bullish falling wedge, breakout, uptrend resumed. And now we've come full circle. So there it is. Again, I've already set this alert, but you can see set a little price alert, replicate the trend line. It's nice and clean. Big negative divergence tells me you could see a crowded rush for the exits. I do believe this is, I believe with high convictions, this is one of the most crowded, overloved, overowned trades. Nvidia's stalled out, it's cooled down a little bit. Still a crowd favorite. I'm just putting levels here. You can replicate these levels. But where to, we'll see. It all depends on gold. But if gold breaks that trend line, remember, it can drop quite a bit. So all of these, including and not limited to this longer term uptrend line, are potential targets for the next correction. Let me just put a line here that would take us back. This is a really good one. If you want to, I'm going to give you a ballpark right now. All right, guys. And we don't even have the sell signal. So just keep that in mind. 49.51. That would be a drop. And again, I think it would probably come quick, of about 17% in silver. So there it is. If any futures traders want charts, I'll post them. Just ask in the comment section. I can give you that. But it's going to look very similar. The trend line should be similar. And then GDX, the miners. Let's look at a weekly chart. We're starting to diverge on the weekly, which is unusual. We haven't done that in a while. We had a divergent high right here on the weekly on GDX. And again, this is a weekly chart. That correction lasted 2.2 years and dropped. It started at this level. I'm just measuring now. The drop was 52%. If you didn't heed that, that warning, and you see a steep uptrend line. So you had a sell signal that came right off the high, and that was it. All right. So then this was bullish, very bullish when we broke out 44. It was this, again, when you look at the weekly chart, that was the key reaction highs. 1, 2, and then boom, we took it out, and we've gone again. You want to talk about a stock, or I'm sorry, not a stock, a security that's gone near, parabolic. Silver, I think, or near vertical, fits the bill. So let's go down to the daily chart. So the levels to watch on silver, right here. You have an uptrend line. This was the daily chart. I gave you a total of 3 targets. We hit my second one. That was close enough. As I said, we always cover above the actual support level you're targeting on short trades, just like you'll sell a little bit shy of the resistance level on a long trade. T3 was one and the same. So you hit T2. T3 was right here, and the trend line came in. This is still a potential pullback target right here, guys. You have a trend line that comes off the January, right in the beginning of 2025. Very well defined, a very nice price target. It was T3 on that last trade, which, again, I think based on this, it would have been a short. I'm trying to recall of that break right there. And so silver's made a marginal. Remember, gold's made about an equal. Silver's made a marginal, slightly higher high. There's your trend line, and you can see the targets. We're still looking for a pullback to at least this uptrend line here, and that's that. On the 60-minute chart, I gave you this. We had a divergent high. It was thrown out here. We hit T1 was my trend line, which was hit there, so we would have shorted somewhere in here. Then we hit T2. We hit T3, effectively T4. Again, if you want to count that, close enough for government work right there. And that was it. I never added additional targets. We also, at that point, I'm going to just update this. We put in you can see I had the positive divergence there, and we made an equal and still divergent low, or just extended the divergences a little bit. And then that was this rally here that took us right about to where we broke down. I'm going to put a level right now, a nice price support level. So now I just gave you a BOD, benefit of the doubt support, I call it. So the trend line is a support level that most likely will trigger the selling. And then 84.19-ish, you could round that down a few pennies if you want to be safe, is a BOD level. You have a previous all-time major high because from that drop, by the way, remember, it was a silver moves. That was a 20% drop in short order. Again, I don't have to tell you if you were long the miners, you felt pain, and if you took the short here, you made a lot of money in short order, right? Same thing when this breaks, especially 84.19. It should be a swift move down. I'm going to give you targets right now, since for those of you interested. All right, T1, I'm going to put right here at about 79.87. Cover a little bit above that, so we'll call that about $80. T2. These are just initial targets here. I may add some more. T3, I'm going to move this now. It's going to move with the old T3 line, but that right about there. So there's your initial targets. And remember, S1 meaning first supports the trend line. S2 is the 84.19 level. All right, so you're up to speed. And look, if silver continues up, it's in an uptrend. No sell signals now. Any new high, marginal new high anytime soon will still simply be an extension of this negative divergence that I'm drawing out here that's been building. So you go up a little more, any new high, assuming it's just a marginal high, and then you reverse, there'll be a divergent high, and you can have a sell signal there, and then you might have a reaction off 84.19. All right, individual components. Normally, when I queue up GDX, it gives me a list of all my the components right here. It's blank right now. But no worries, because I have multiple watch lists of gold mining stocks, and I have silver miners all on a different watch list. So I'm going to go over the top components. I'm going to do it relatively quickly. Keep in mind, I often say this, not in every sector ETF, but in some, especially GDX, birds of a feather flock together. In other words, biotech, you're going to have a wide a diversity of charts, some bullish, some bearish, because they're all working. They have different nuances, different product pipelines. Some are little startup biotechs putting all their resources and betting it all on one drug coming to market and being approved. And then you have well-established biotechs that have half a dozen or more approved products, many in the pipeline, and more visibility on that. So you're going to get that disparity there, or dispersion between the charts, but not so much in the miners. They all tend to look the same. So I'm going to rifle through them. The common theme is this is where we shorted them last. This was Newmont, and I went over this at the time. So I do this because, just like with the NASDAQ 100, the reason I'm always concentrating and analyzing and covering those MAG 8, 9, 10 stocks, because they have the biggest weighting, I like to do the same in the miners, because if you want to be that second mouse that gets the cheese, you don't want to jump the gun on a short, because this has been a very powerful uptrend, then you want to see at least the majority of these guys break down, especially the big ones. So when I do these lists, when I cover components, I typically will sort them, as I have here, by market cap. Keep that in mind. So Newmont is the 800-pound gorilla in the sector, right? It's the, we call it the NVIDIA, if you want, to the NASDAQ. That's what it is to GDX. And there it is. So there's your uptrend line, minor uptrend line. Remember, sell signals can come also in the form of candlestick reversal patterns. But there's a more significant uptrend line right here that I just drew that comes off this April low, that key April low. And that would, when broken, will trigger a more powerful sell signal. So that's your first one right there. You have a little bit of price support there as well. You take all that out, you can see these are the likely targets down here. AEM, nice clean trend line. So again, if you are interested in the metals, whether you're bullish and long right now, maybe you don't have a position, you want to get long, you want to buy on a correction, or you want to short the next pullback, because again, you got to be nimble, but that's what we do. That's what the site's all about. Try to get it. There's your minimum and first target, 150.50, we'll call it. I have it at 150.47, cover a little break of that trend line. Now, it's pushing here. This, what I'm drawing here, let me draw it for you, is called an ascending triangle pattern. You have an uptrend line and then a horizontal line. And if it pops, that's going to be a breakout. You can see the resistance. We've been tapping on this level. But any new high anytime soon, equal or new high, will be a divergent high. That's a guarantee. Doesn't guarantee we can't keep taking it out and burn through the divergences. It's just, I'm telling you, it's going to be a marginal new, still divergent high, increasing the odds that that breakout will fail. And again, a sell signal will come on that level. It's very well-defined uptrend lines. And, I try to share I do these videos because I can convey a lot more in speaking in these 20, 30, 40-minute videos. From my experience, the better defined trend lines are, the more eyes see them. Sometimes I have to realize that I may see something the rest of the market doesn't see, and I may think it's valid, but guess what? If enough traders don't act on it, then it's not going to play out. In other words, I don't force trend lines. I don't force price resistance levels. I don't try to force trading a stock on an moving average, exponential or simple, if the stock doesn't quote unquote behave well off it. That means behave well means on pullbacks to it, buyer should step in, and then breaks of it, you should see a trend change or a bigger drop. So this is a very well-defined trend line, and the more of these you get, I promise both man and machine alike, meaning humans and algo and program trading programs, are going to see those trend lines, and the sell orders are there. The stop loss orders are there for bulls. Short sellers are going to jump in. And again, if AEM breaks this trend line, but yet Newmont and Wheaton and Kinross and all these Barrick, they don't break down at the same time they're hitting support and bouncing, well, this breakdown will fail. That's why I do these videos. So if I'm sitting here, whether it's next week or 3 months from now, and all of a sudden my alerts are going off like popcorn on my screen, popping up, little alarms are going off, and I look and I see these guys, a lot of these guys breaking down, I'm going to move, and I'm going to move fast. Because again, as I've showed you, on a hot trend like this, when you have a lot of hot air in stocks, the reversal can come fast and furious. And if you ask me a day or two later, hey, Randy, is it still objective to short GDX or silver? I'm probably going to say no. I wouldn't chase, because if it dropped 10% in 2 days, you're in no man's land. You might be halfway to my next targets, and I like getting in early because it's easier to quantify and place your stops. If you short a breakdown here, you can have a stop right, not too far above it. But if you wait to go down big red candle here and you short here, well, there's not a lot of support between this level and, to be honest, about right here. I'll show you. That's the next. So this to me is what I call technical no man's land, smack in between support and resistance, and I don't like entering trades there. WPM, Wheaton, tweak that trend line. There's your uptrend line. Big divergent. This is the last time we shorted all these guys here, and again, these guys can fall fast. The individual miners, Wheaton fell 19% in 1, 2, 3, 4, 5, about 2 weeks. KGC, again, birds of a feather, right, guys? Divergent high. That was a divergent high. That was a sell signal. That was a drop. Nice support. These are still targets on the downside. Sell signal comes on break of that trend line. I'm going to give you one additional support level that needs to be taken out. They'll probably buy it here, 26.26, then 24.23, then 22.08, which also comes in with a very nice trend line. So there's something for everybody in these videos, bull and bear alike. Bulls that don't like to short can wait if you get a pullback to 22 and or this uptrend line. You get the 200. 200s don't really mean as much on the miners to me, but you have a confluence of nice support here that even if ultimately those levels are going to go, they'll probably see some buyers step in for a nice trade there. So you could short it down. Again, I'm just going from where we're at today. Who knows? We don't have the sell signals yet, but that'd be a 24% drop to the $22 and uptrend line target. If we go higher, then, well, it's going to be a bigger drop, depending on where the sell signals come. B, Barrick. Barrick, beautiful uptrend line, wedge 1, secondary trend line. I'm going to tweak it right now. I'm going to tighten it up a little bit. So there it is. Break of that trend line, set an alert. There's your secondary target right there, secondary trend line that is. And I'll probably have to update some of these. I haven't updated them in a little while. I'll give you some levels. All right, guys, so that's it. You can see I'm just going to click through the rest of them fast and show you the near-term trend lines, which will trigger the next sell signal. And then you can see I'm adding some levels here. You can replicate these charts. If you are interested in any one of these individual names because you're long, wanting to get long, short, wanting to get short, feel free to bump me and I'll update. Some of these lines are older lines. I haven't updated a lot of these charts. From time to time I do that. because the the levels change over time. RGL, Royal Gold, even a, see again, when you start, you have trend lines and then a steeper trend line, that's when stocks start to go parabolic. And again, that's unsustainable. It can go on for a while. It can sometimes go on a lot longer than most think. However, just be careful chasing these guys here. And again, when they start to go parabolic, when the music stops playing, if you don't have a chair, you can, in other words, when the music stops playing, they can fall fast. That means when the buying stops, the momentum breaks. Uptrend line, HL, CDE, that one broke down, still well below there. IAG. All right, so that's it. Nice, look at that beautiful bearish rising wedge. Little price support right here first. So these are your levels, guys. This one breaks. Again, I'm just assuming from where we're at now, wedge break. I'm just using my measuring tool from where we're at. That's a 13% drop to that 1477 initial target. So you'd want to cover on that one about 1481 would probably be where I'd have. But again, I think it'll go down through there. There are targets that that's the first support level. Next stop is going to be down here. I'm going to move that up 1261. That's a 26% drop. I'm going to move that up to right there. And then final target at this point in time would be 1068. That's going to be, if hit, a drop of about 37%. All right, so you get the picture, birds of a feather, right, guys? All these uptrend lines, nice and clean. Oh, sorry, I had to pause it there for a second phone call. All right, that's it. I'll just click through. You can see the others. Oh, I didn't tell you which that was in. That was a nice looking one. Where'd I go? Where did it go? Right here's my watch list. NGD, New Gold. Nah. All right, that's it. So some of these guys have already peaked and are lagging behind, and others have made marginal new highs. And even on the ones that are lagging, you can set these trend lines. All right, let's wrap it up here. What is my time on this video? Let's see if I can get to the ag input stocks. Yeah, I'm going to rifle through them because I'm on semi-vacation mode. And I don't know when I'll be able to get another video out to you. This is a sector I've was covering quite a bit earlier this year, last year, for a while now. This one's kind of the leader in the sector, and it's been in an uptrend. I mean, if you look at bigger picture, this is as far out as I can zoom on my daily chart. It goes back to 2020. But you have, it's nice uptrend. You get these divergent highs like that one every now and then. You correct, then you get a divergent low at support. Next leg up, divergent high, another correction, ended with you got it, divergent low, another divergent high. Pulled back. This is nice support. Again, this is stock I've covered many times since. It's in an uptrend. It's needs to take out this level right here and continue that uptrend. On the downside, you can see the support levels that would provide objective long entries on pullbacks too. But we are coming off a divergent high, so that's why it's been a bit of weakness lately, just like that divergent high. That one was not too bad. That one was a little worse, but so there's that. NTR. Again, they're still listed as active trades because that problem is I did video, a lot of these like I'm doing now, I cover in videos and they get lumped in. I can only categorize once I tag the post with the symbols I cover. I can put it as an active trade and then they're all active trades or not. So some of these, just trade them on their own individual technicals, guys. But this one, we would have bought somewhere off this divergent low. Maybe that breakout right there, I think it was, made a marginal and still new divergent low. T1 hit, T2, 3, 4, and it's never given me a reason to close it out because it's in an uptrend. We bought this as a bottoming play. There was a beautiful downtrend line, big divergent low, and this, by definition, is an uptrend, lower lows and higher highs. So there's your next target. And you can see an uptrend line if you're in this one. These are like investment, long-term trades, and there's an uptrend line which you could have an objective stop below if taken out. Again, over time, these guys can go way up quite a bit more from where they're at. So I can't remember, guys, where the entry was. So I'm just going to measure from that divergent low. But so far, it's been a run about 51%. If T5's hit from that low, it's going to be about a 58, almost 60% run. CF is setting up for the next leg up. So again, somewhere off maybe that divergent low. I gave you 2 price targets on this one. T1 was hit right here. But again, this one, they're not, they're holding up, and the charts look constructive, especially now. That's why I'm highlighting them. Now you have a nice clean downtrend line with my favorite setup, positive divergence right there. Gives you a little wedge type pattern, breakout there. Could be the catalyst to take you up to that T2 target. If so, if hit, and again, it wouldn't be right away, but these guys can start to move. They can get some traction. That'd be about a 39% profit up to this T2 level there. Mosaic, MOS, divergent low, positive divergence, T1, 2, 3 hit. When we hit T3, we had negative divergence. Nothing goes up forever. Correction was a little more than I wanted to see, but still above the previous low. And that's still the final official target with a potential 5th, which I think if we can get some traction going on these, I think there's a good chance that'll be hit. If so, that's going to be about 137% run from where we're at now. It may want to equal, from my experience in recent years, a lot of times when you come in to test a previous low, the nefarious forces at B will pull it down below to give that washout. We call that a stop raid, because a lot of retail traders will have their stop just below, and that's a possibility. So, like I said, I don't have a hard entry point on this one right now. Just watch the sector. Just start to get momentum. If some of those other ones I've mentioned break out, Mosaic will most likely follow as well. ICL, this one's already hit our final target. We divergent low, T1, 2, 3, and my 4th and final target there hit, followed by a divergent high. That was a run of, I'm just going to grab a little above the bottom. That was almost 100% run in this one. And it came full circle, put in a divergent low. However, when you look at the chart, bigger picture, here we'll go to a weekly. I'll show you on a weekly. This is what it looks like on a weekly. This is why I was bullish on these guys back here. Big positive divergence. A lot of my lines disappeared and they do from time to time on the PPO. I'll put them back. And that was, again, wash, rinse, repeats. It's simple stuff, right, guys? Divergent low, breakout, bull trend. What was the bull trend measured in? 93%. This was just COVID, so everything was wonky. So let's not even measure that one. Divergent high, bear market, bear trend, 71% drop. Divergent low, so far up 96%. And to me, again, based on the scope of this divergence, yeah, you had a divergent high, but this is most likely a corrective wave with another leg up is my current opinion on these guys. All right. Especially you probably see market it's been a market, as I've been talking about lately, with a lot of sector rotation. Like I said, nobody's making money in the S&P 500 for months now, but you're making a lot of money if you're trading individual stocks, long the most bullish, or sectors, short the most bearish. SMG, Scott's Miracle-Gro, divergent low here, divergent low there, divergent high, set it back down, and now another divergent low. So time for this one to come up. It's got a big basing pattern here. If it can ultimately break above there, that would be bullish longer term. FMC looks like shit, so I'm not even going to spend time on it. Plus, keep in mind, when I go down this list, remember, I sort these components by market cap. CTVA was a $45 billion company, NTR 30 billion, 31 billion almost, CF 13 billion, and now you get down these little guys. They're high risk, very low market cap. So, keep that in mind, position sizing. You don't put nearly as much in these small little speculative ones. UAN just recently put in a divergent high, but it's at support. And again, moving up, it's in an uptrend. I'm not crazy about it. IPI is ready to pop. IPI, we had a divergent low here. We've hit 1, 2, 3, 4 of my 6 targets, and now we've come full circle. So I definitely like this one. Positive divergence, nice clean downtrend line in which to trigger a buy signal if and when taken out. You can see these are the previous levels, but they're still, and a lot of them have already been checked. We already hit these targets. So it increases the odds if we break out here, we may just go through these levels now without a reaction. We could still have reactions. There's still resistance levels. I'm just saying, if you're positioning, you might not want to book profits anymore because those levels have already been hit. Once you've hit a target and had that reaction off there, like T4 zone, then it's kind of been checked. And so it opens the door, increases the odds you're going to go up to the next targets there. And that one gives you a gain. If my final targets hit, you've got about another 115% from where we're at now. So wait for that breakout. Wait for the majority of these guys to break out, just like the miners. So AVD, divergent low, T1 hit, primary downtrend line got rejected off right here. Very significant level. You want a price alert on that. Right there, your primary downtrend line. And this little minor downtrend line should do the trick. Pop there, and then that. And then these are still the same targets. It's just, again, nothing goes straight up. Everything works in waves. All right. We're getting down to the low price crap, so stay away from that stuff. Some of these have already gone away. All right. I'm going to wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.